Hello, everyone. Um, I'm glad to see you here. Please let me know, can you hear me? Can you see me? And we will start this stream. Please write in chat if you can see me and hear me. Okay. As I can see, everything works properly, and we can start the stream. Before replying your question, I would like to remind you how we will work during this stream, and some news. First of all, I started making market overviews also in stream format. The first one stream was this Monday. And if you want to get ideas about different markets, let's do it like this. We will have the stream about market overviews every week, and we will discuss markets during that stream. As for this one, it's better to ask questions about trading, about how to use different indicators, tools, how to use proper money management, and something like this. Just the topics which are more about trading, but not about exact market. I think it will be more interesting, and we will be able to split into two streams, different type of content. Also, during the next week, estimated it will be Thursday. I and my colleague Dan, we are going to make a new stream about algo trading. We will discuss the current results of the robot. We will talk about testing robots. We will talk about our robots, about possible ways for improvement of this work, and we will be glad to reply your questions about algo trading. So subscribe to our channel just in order not to miss this stream, and I'm sure you will get new knowledge and experience about algo trading too. As for this stream, as usually, I picked some questions from Discord channel, from Ask Me group, and I got questions from TradingView posts, from comments. And if you have questions during this stream, and I can see one question about DMA indicator, just leave your questions in the chat, and we will talk about it, and I will be also glad to reply on them during the stream. So the first question was about stable coins like USDT, USDC, TUSD, and how to use them, and for what we need to use them. I should say I was surprised, let's say like this, when during the bullish period of for crypto in 2017, when I got a lot of comments and a lot of requests from members who asked me to provide trading ideas and market overviews for markets like coin BTC, and it was like it was good interest for such type of coins. For me, it was rather strange, such decision to trade coin BTC markets, and I try to get any comments, replies. Why you use why you use BTC instead of USDT for trading. And there were just logical replies that Bitcoin is stable, USDT is not so stable, was not so stable, and it's better to hold profit in BTC. From this point of view, yes, the trading with coins and coins pairs, it was logical, but at the same time, you didn't have opportunity to fix profit. If you want to make profit on crypto trading, it's better to use pairs like coin, fiat money, or if we don't have fiat pair, it's possible to use stable coin. You need something to fix profit. So just imagine it was a good period for making profit, and those people who could fix profit time by time and exit into USDT, they could keep the profit from Bitcoin growing and from other coins growing. And if compare these people, these traders, with another group who just fixed or who wanted to increase the number of Bitcoins, so they also dropped with their profit when Bitcoin dropped from 20,000 to 3,000. So from this point of view, I would like to use stable coins like USDT, if we talk about stable coins, and let's say new variants of stable coins like USDC and other ones, just only for fixing profit. For cases if we don't have fiat pairs, from this point of view, I agree. I agree that such alternatives of fiat like USDT is, of course, it's not so stable like USD dollars, like another fiat pairs, but alternative like keep profit in coins, it's not a good variant. If we talk about USDT and compare it with another stable coins, from my point of view, USDT looks much solid, because at least we have some background of this stable coins, and there are a lot of these stable coins in the market. So it's better, from my point of view, it's better to use USDT instead of other new stable coins. So if we talk about this question about stable coins, I would like to use pairs with fiat money. If I don't have fiat money, it's possible to use USDT. If in other cases, I don't know any example where you can't use USDT. Only if we talk about trading with shitcoins, where you can use shitcoin BTC, but in this case it's possible to sell in Bitcoin, and at this time also to convert the part of Bitcoin into stable coins or fiat. The next question was about Bitcoin dominance on the market, and we talk about the role of Bitcoin in crypto world on to my previous streams, that we have the main coin like Bitcoin and other altcoins which follow the main coin just all the time. From this point of view, we can see it like maybe the main thing which is not good for trading and which is not good for diversification. When you have only one market with a lot of other markets correlated with this main, financial instrument. It doesn't allow you to make proper diversification, and it means you just open the same. You think that you use different markets, but mainly you use only one market and only this direction. So from this point of view, Bitcoin has the most important role, and it can push markets. Sometimes altcoins can follow it, and sometimes we can see just different movements when money moves from altcoins, shitcoins to Bitcoin. If we have something positive only for Bitcoin, or if we have just exact price movement or maybe strong movement for Bitcoin, sometimes big players prefer, I don't know, I can only guess why they prefer to move from altcoins to Bitcoin and support that movement. In such way, we will have different price movements. But again, I think it's logical that Bitcoin takes so much from crypto, and I think it's logical why it is so important, and why it has such so huge space of all crypto coins. Bitcoin is the first coin, and it has a good reputation, it has good volume, and now we have futures for Bitcoin. So all these things together, and support of community, and just another reasons, it makes Bitcoin one of the most important coin. If we talk about such, let's say, perspectives about the part of Bitcoin in the future, crypto is a very small market. Crypto still has some potential for further growing. Let's think like this, because now we don't have any reasons to think in another way. We talk about the market with huge potential, which of course won't be able to replace financial system which we have now, but which can take one of roles of the financial system in the financial system. So the market will be able to grow, and Bitcoin will be one of the main coins still, I think. Probably in some time we will be able to see maybe another several coins which will grow their parts in the crypto world. But how it will change, I think at least we need to get something new for traditional markets, like we have now futures for Bitcoin. If you want, for example, to increase the value of Ethereum in crypto and the role of Ethereum, I think at least we also need to get something like futures for Ethereum, for other coins. Only probably after that we will be able to talk about how Bitcoin will change the part of crypto space. So as for another question, it was to my mind from Discord channel. The question is, I get confused by the time frames. When I want to do a short or long position, on which time frame should I work? I mean, every time, if I trade based on the 4-hour chart, I go on smaller time frames. For example, 1 hour or less, and check RSI and so on. And then I'm getting totally confused because, for example, the RSI is oversold in the lower time frames, but in the 4-hour time frame, the RSI is overbought. Just an example. So how do I get the correct information, or how should I take this strategy and deciding which time frames matches my strategies? I think the best idea this idea was described in the best way. You can find it in books written by Alexander Elder. Uh, he is a professional investor trader with huge reputation and well known in the financial world. We can say he is a real guru of trading. And you will be able also to find a lot of other information. So he has a strategy. He developed the strategy many years ago. It was called like free screens. I'm not sure how it will be correctly in English, but it looks like free screens or free time frames. The idea was described like the idea of this trading strategy will explain you perfectly how to trade using different time frames. I can tell you just the main idea, and you will be able to follow this my idea and add more understanding and knowledge from reading free screens trading strategy. And you can also use this strategy because this strategy is really stable, workable, and it was confirmed by many years and a huge number of different traders. So let's say you have three different time frames. There is a high time frames, there is a middle time frame, and there is short time frame. For example, you can use a weekly chart where you search for the main direction. So, for example, the weekly chart can give you uptrend. Then you fix it. Then you go to lower time frame, which for you can be like daily chart, and search for the situations when market will be oversold. Why it's so? If you buy overbought market, just trying to follow the main direction from the weekly time frame, you will open your position far from a positive, a good entry level. You will face with a correction movement. So buying based on the daily chart without waiting correction, it won't be a good idea. But if only a weekly chart you have the uptrend, and on the daily chart there is a correction where the price moves against the direction of the weekly chart, it means you will be able to catch the reversal of correction and enter the market in the best position, and you will be able to make your stop loss as less as possible. And you will be able to join. You will be able to catch a new upward movement from the daily time frame, which will be supported by the same direction from the weekly time frame. So it will make your trade more. It will make your trading more stable and more profitable, because you will use weekly time frame like an additional filter, confirming that you open a trade in the right direction. Also, you can move even lower and use, for example, 1 hour chart or 4 hour chart, where you will be able to find the better place, even better than from the daily chart, place for opening by position. But I remind you that if you have your higher time frame direction like uptrend, on the daily on the lower time frames you search only buy opportunities, not sell opportunities, because your goal is to find a good entry level for buying in the direction of the main trend. So you can use just two screens, like weekly and daily, where you catch for the price reversal from after correction. Or you can also move lower using the third screen, where you can search, for example, price reversal after downtrend, which probably will be on the hourly charts. You will see you will be able to use signals like trend reversal, probably divergences. You will be able to use breakouts or trend reversal signals from hourly charts, and probably your entry level will be even better than just getting signals from the daily time frame and buying based on the daily chart. So the idea of the third screen is to get the best entry level, the best one. So you will be able to use the signals, buy signals from the 1 hour or 4 hour charts, reversal breakouts, which will be supported by the daily chart, because during the daily chart you will buy oversold market, and this trade also will be supported by the weekly time frame, where you will follow the main direction. If we talk about the book of and the strategy of free screens, the author suggests to use 5 for searching for making charts, for making time frames. For example, if we talk about the daily chart as your main for getting signals, for the main signals, you need to increase in 5 times the daily chart. It will be a weekly chart. And the same goes about charts for hours. You can use, for example, 4 hours, and it will be just close to the daily, because 4 in 5 times more, it will be about 20 hours. We have 24 hours during per day, but you need to try to follow this difference between screens. So it can be 5, it can be 4. It's just the idea. Why you need to have such difference? Because, for example, if you use 1 hour chart and 2 hour charts, and you will try to find the difference, this idea won't be workable, because there is no big difference between 1 and 2 hours. So your signals won't be so good, and you just won't be able to fulfill the potential of trading using different time frames. From my personal experience, I should say that you can use only one screen for trading. It is possible, and nobody can push you to trade using 1, 2, 3 screens. It's possible to use only one screen. And for example, robots which can be tested only using signals from one screen confirms that in the long run this type of strategy can be also profitable. But at the same time, from my experience, when I tested different strategies, and when I used only one screen, and when I just added the second screen, which is higher, like for example, I tested trading strategy based on the 1 hour chart, where I could get trading signals, and when I started adding the daily time frame, I could increase the win rate and profit, just only adding this additional time frame, because it just even if you use minute charts, if you use hour charts, if you use intraday trading, you must follow at least the main direction from the daily chart, from the daily time frame. And if you open your trades in the direction of the main time frame, like daily, you have more chances that your trade will be successful. So from this point of view, yes, it is really interesting option which you can use. But on the other hand, it will make your training a little bit complicated. And it will make your trading more complicated if you would like to test your strategy manually on the past historical data, because you will need to use two charts and compare signals. But again, for more details, you can read Alexander Elder's. You can search in Google free screens trading strategy. It is really very popular, and there are a lot of modification of the strategies you can also find. So you will get the perfect understanding how to use different time frames and for what you need to use different time frames. So the second question was about the second question. The next question from the chat. If you have more questions, just leave them in the chat of this stream. The question is about how to use a DMA indicator and why I like it. Just a second, I will tell you. So about DMA indicator. So I put it upwards. So here it is. DMA indicator, it shows us market conditions. We can have trend market conditions and we have range market conditions. Range market conditions they need to use let's say trading strategies based on range principles of trading. When we have range, price moves up and down, and you buy at the bottom and sell at the top and continue trading like buy, sell, buy, sell, buy, sell. When we talk about trend market conditions, mainly we must open a position after correction based on the reversal. Sometimes we can use breakout signals about the previous highs. For example, let's say I will hide useless indicators. For example, we have the uptrend here, and the price moves upwards, downwards, upward, downward, and we have the bullish structure. When we use trend following strategies, we can buy based on reversals after correction. So we had the price movement, then price corrected this movement, and this zone give us the reversal, and this reversal signal can be used for buying. At the same time, when we talk about trend following trading, this is the best zone for buying in the direction of the main trade. At the same time, you can use this high for entry, because if we talk about trend direction and one of possible variants how we can find a trend, we need just to compare the previous swing highs, swing lows. If we have higher highs and higher lows, swing highs and swing lows, we have the uptrend. If we have lower lows and lower highs, we have downtrend. If we have something different from this, we have range market conditions. So if you don't want to use indicators, and if you prefer to use only charts without anything, you can use swing highs and swing lows as the main tool for searching for trend directions. So if you buy based on the breakout, you just follow the main idea. So here we have a swing high. If price breaks this level, we will get just a new higher high, swing high, and it means that the trend will be continued. So buying here, it's also a possible entry level. But for you, I need to show, I need to explain, and you need to see that this entry level is not so perfect like this one based on the reversals. This level can be used like if we talk about markets like Bitcoin, and for the long run with markets which have huge potential for moving upwards, it's possible to use such breakouts, but mainly it's better to search for the price reversals from the we can draw this uptrend line from moving averages, which act like trend lines too. So in this case, you have a small stop size, a lot of space for potential profit, and if compared with this rate where you will have a huge stop and less space for profit. So you see, this method is a little bit different if compared with the method like you have trend market, range market conditions, and you trend in the horizontal price channels. Okay, let's imagine that we have such price channel like this one, where you have the upper line and you have the bottom of the price channel, and price moves up and down, up and down. So from this line you you buy, and here you fix profit and sell. Then you fix profit and buy, fix profit and sell. So your trading is like zigzag, and it's profitable. But when market moves in trend market conditions, all your sales on the uptrend like this, yes, you could get some profit, but sometimes correction can be very small like this. If you continue doing using range trading strategies, you will have lost rates, and on trend market conditions mainly range market strategies are not profitable. The same goes about trend market. The same goes about trend following trend strategies. When markets start moving in range, trend strategies they start giving you a lot of false breakouts, a lot of false signals, and they also not so profitable. Mainly when you start using an exact trading strategy in wrong market conditions, it's a period of making drawdowns. So from this point of view, DMI allows you to find the proper market conditions for your trading strategy. If you use now only trend following strategy, you must search for market conditions where there is trend. DMI indicator allows you to find such market conditions where buyers have power and strength, where sellers have strength during downtrends. So this indicator consists of three lines. Let's say we have a green line, we have red line, and we have blue line mainly. If you use different platforms, you will be able to find this indicator like DMI indicator. Sometimes you can find IDX indicator. Sometimes you can find DMI system. So different platforms will give you different names of this indicator, but the idea is simple. These lines, to my mind, they are DI plus and DI minus. Yes, DI plus and minus. So DI plus, it is the line which show us not the strength, just it's related with bulls and with buyers, and DI minus it is related with sellers. So if like this red line is above green line, it means let's say it's period of sellers. If green line is above red line, it's a period of buyers. And if there is a space between them, so we can see that there is a difference between strength of buyers and sellers. For me, these lines are not so important because they show you let's say they show you the trend direction. So if red line is above is higher than green line, so we have downtrend. If green line is above red line, we have uptrend. But we can use for this purpose also moving averages, which also can show us the direction of trend. So from this point of view, for me, at least for me, the position of these lines are not so important. For me, the most important role acts at the X line, this one blue line. The idea of this line, it shows the strength. So for me, strength is much more important, because when this line moves upwards, it means that the market and one part of players, they become stronger. They have power to push markets in this direction. So if we have this line moving like upwards, and we use different tools and see that we have now the downtrend, it means that with growing and supporting blue line at the X line, we have trend market conditions, and sellers they have power to push market lower. So it is the perfect situation for using this trend following strategies. Here is just an example. When we have let's say we have price movement. If we talk about searching for downtrend, the first signals of downtrend, let's say we had one swing high, we got another swing high which is lower, so we have swing lower between them, and when price broke this level here in this point, we got the lower swing low. So we have lower swing highs and lower swing lows. From this point of view, we have downtrend. But at the same time, if you look at ADX line, it starts only moving upwards, and for us it's just a signal that a new downtrend is going to be, and we can start using, for example, if we traded before it based on range market strategies, it's time to switch to trend following strategies. So from this moment you start trading using trend. So market moves slower, we have a pullback, a correction against the downtrend, we have reversal signal, it's time to sell. Then we have again the downward movement, correction, reversal signal, and it's time to sell. And this, at the same time, we see how ADX line supports this downward movement and allow us to use proper strategy in the proper market conditions. One more thing which you need to know. We have this indicator has a signal level. In some books you can find it like 20. In some books you can find it, or some traders can suggest you to use 25 level. These levels are signal one. I prefer to use 20. The idea of this level is very simple. If ADX line moves above this signal level, 20 or 25, it means that we start a new trend. If this line, ADX line, is below 20 or 25, let's say if this line is below the signal level, we have range market conditions. There are also such additional signals which we can use. For example, probably you won't be able to find them in description of this indicator, but again, it's just from my personal experience, and you can also just check my idea scrolling the charts to the past and looking how the markets move and how ADX line supports this movement. If we have trend market conditions where ADX line is above signal level, and this ADX line moves upward, it means it doesn't matter downtrend or uptrend. It means that the trend is strong and we have the impulse wave, the wave in the direction of the main trend. So every trend consists of two types of waves. The wave in the direction of the main trend, let's say it's like impulse wave, and a wave against the main trend, let's say correction wave. So when ADX line moves upwards above signal level, we have trend, and the wave in the direction of the main trend. When ADX line starts falling, it should be above the signal line, like this in this situation. It tells us about a possible correction. So when we have a correction, it means, for example, here in downtrend, sellers have power, but they are not so strong like before, like when the ADX line moved upward, and we saw downward movement in the main direction. So every time when ADX line starts falling, it is the first signal for possible correction. Or also, if this line climbed too high, this falling can be a signal of possible trend reversal. So, like here, we see that the line reached 44 level. 44 level, and the maximum level is 100, but don't expect to get 100 or something like this. Above 50, we can say that the trend is strong and probably there will be a reversal soon. So when ADX line started falling from this period, we still got some downward movement, but we see that ADX line doesn't support this downward movement and continue falling. It is the signal that sellers are not so strong, and if they are not so strong, probably the downtrend will be reversed. This trend can be reversed into sideways movement, or it can be reversed to the uptrend movement. So from this moment we could think about fixing the profit profit we could start making from these levels, just based on breakouts, reversals, and so on. So if you follow the trend, it's time to thinking about fixing the profit and searching for possible trend reversal signals. So at least we have also confirmation using swing highs, swing lows that we have the downtrend, lower swing highs, lower swing lows. ADX line start telling us about possible trend reversal, and we see that when price bounced from this support zone, when price broke this swing high, we got a new, let's see, we got here one swing high, a swing low. After breaking this level, we got the second swing high, higher than the previous one, and it was a signal that probably we have a new uptrend. And yes, the X line continued falling. In some time it was red line and green line changed, and we started a new uptrend, where you can see also the same trade opportunities based on reversal. And look how the X line started supporting the uptrend. For some time, the line dropped below the signal level, so let's say it was like a signal about possible sideways movement. But when it started moving and move above 20 level, this movement gave us just additional signal, confirming that probably we should be ready to see a new uptrend. And yes, we saw the uptrend also. Look at this, the period of upward movement, and the period when ADX line start falling, and we got this correction movement. But after that, ADX moves upwards, and we see bullish candles here supporting the main direction movement. So from this point of view, you use this ADX line above the signal line for getting signals that buyers or sellers are strong and have power to push markets lower or upward. I remind you that it doesn't matter the trend direction. ADX line tells you about the strength of buyers and or sellers. So you need to apply it with another indicators, or you can apply it with this DI and DI lines. The X line shows the strength, and from this point of view, it is really a very interesting indicator. So the cases when this line confirms range market conditions. For example, I just want to find for you a good example, like here. So if a DX line is below the signal level, let's see, I use 20 level, but for some markets I think it's possible to use 25. I will tell you later for which markets it's possible to use. So let's look at this example. We have a DX line which moves below the signal level from this period of time up to this period of time. You can see range market conditions, right? Where you use range trading strategies. So you buy here, you fix profit here, sell here, buy here. Here the market didn't reach the previous the upper border of the price channel, but still it gave us signals here, here, and here. So, for example, if you use trend following strategies in such range markets, you will get you will get a false signal about continuation of the uptrend here, because yes, we got the new swing high, higher the previous one, new swing low, higher a little bit the previous one. You open trend here, you open buy position here, just with huge profit target, something like this here. And in this example, it's a good example that in this case, trend following strategy could give you profit, but there are thousands and other examples where your trend following strategy in such period of market conditions will give you only false signals and trades closed by stop orders. So we got confirmation that the market doesn't have strength for moving upward or downward. It continues. It continue the price movement in the borders of between resistance level 1, resistance level 2, and support level, which is the bottom for the market. So from this point of view, ADX line allows us to, for example, stop trading if you use only trend following strategies. Such position of ADX line below the signal level and moving like up and down. And just draw your attention how DI lines also they become close together during the during the range period of time, during the range market conditions. So the range market, if you use trend following strategies, it's a period not to use them at all. So from this point of view, this indicator also provides us a good ideas about which market conditions we have now and which trend strategy we can use them. We can use in this exact period of time. I also should say that there are such let's say price ADX movements like in this. So we can say yes, now we have something like a market without strength, but ADX line start moving and it moves and cross the signal level. So this moment when the line moves upward but didn't cross the signal level, it can be like a period of starting a new possible trend. But this signal is not so reliable. It's better to wait when ADX line moves above the signal level and use this signal for confirmation, trend market conditions, and further steps. This indicator is not perfect. So if I explain you and you think it is really cool and it is really workable, I will use it and I will make a lot of money using just these simple signals. I need to tell you that this indicator is a lagging indicator, and it provides signals with a really good delay. So when if you want to catch a new trend in time, you won't be able to do this using this indicator because let's say we will have a lot of situation like, for example, this one, right? We have a new swing high, so this level could be used for buying. This level, just about 99, let's say, like this. So from this level, after breakout this the previous swing high, we have higher swing lows, new swing high the previous one, and this signal can be used for buying already. And you can see how many profit you could make. But if you use DMA indicator, look just how many candles we need to wait when ADX line moved above the signal level. So only from this level you could buy, just if you wait for confirmation from DMA indicator. So from this point of view, also it doesn't mean that this indicator becomes useless. No, you just understand that all indicators have strong and weak points, all of them. There are no perfect indicators, and you just need to use strong points of indicator and try to cover them. Try to cover its weak points and weak moments of this indicator by strong points of another indicators, and combining different indicators, different signals all together, you will be able to create a stable trading strategy. So DMI is still a very interesting indicators. I use it with all my trading strategies, and this DMI indicator uh, is in my trading robot, and it is just like one of possible filters, allowing to skip, not absolutely and totally skip the market conditions which are not suitable for the robot, just to filter the part of these conditions, because it's impossible to filter everything. It's impossible to get only reliable signal, only stable signal, and only profitable signal. So I hope you can also find more details about this indicator. I don't remember who is the author of this indicator. Maybe it's better to use Google search, but I can advise you to use this indicator in your trading. So sorry for some technical issues. I hope now I am. You can see me. So yes, the next question was about any expert advisors software. Yes, we have the trading robot, which was developed based on my trading strategy, and during the stream we'll talk about it with more details. Because we had a good period of we had a good period of profitable months, and now during 2 months our robots just close lost rates one by one, and we have a drawdown. So it's a part of trading. We talk about it many times already. There are no reliable signals. There are no 100% reliable trading strategies. We have periods of making money. We have periods of drawdowns. It's a part of any profitable trading in the long run. But these 2 months they are rather difficult for us because the signals from our trading experts also are not so perfect. And the train robot also shows drawdown. So during the stream we will talk about it, and we will just think about how to solve this issue, which can be solved completely, but how to pass this period with comfort and keeping your and our money. The next question was about MACD indicator. We can also talk about it, and we can, yes, we can use, for example, another charts. Let's move to this one. When we talk about MACD indicator, which is also the favorite, one of the favorite indicators of Alexander Elder, and you read about free screen trade strategy, you will see how he uses this MACD indicator, and it is the part of that trade strategy. MACD indicator is let's say it consists of, you can use it in it consists of two parts. One part is MACD lines, and the second part is histogram. MACD lines can be used like trend indicator, which can support the the trend movements on different time frames. It can be used, and MACD histograms can be used like oscillator. So oscillator, it's a type of indicators which moves up and down and shows overbought or oversold market conditions. From this point of view, MACD histogram also can be used like this for confirming not overbought or oversold market conditions, because RSI and stochastic will provide better signals and they match these criteria. Histogram can be used for using for confirmation trend price reversals. So if compare MACD lines and MACD histogram, MACD lines they are not so sensitive indicator, but MACD histogram they just histogram can move. It's more flexible, and it can copy and support the short-term market movements. Just let me explain. For example, you can use MACD lines like the indicator confirming and supporting the trend direction or movement direction. You can use the signals from MACD for opening trades. It is very simple. You can use default settings. You can see the fast length, slow length. These parameters allows you to set up these lines. So fast length will be the blue line, and the slow length will be like orange line. So these lines, they are super close to moving averages, and if you put them to this indicator, you will see how they copy the same. They will be closely the same like MACD lines. You use the same principle of just one of possible signals from moving averages. You can open buy position when when fast moving averages crosses slow moving averages from low to higher, and the same goes but in opposite direction when fast moving averages drops from top to lower and crosses the slower moving averages. It's a signal of for selling. So the same goes about MACD lines. When blue lines crosses from downward to upward the orange line, the slow moving average, and the slow line of MACD indicator, it's signal for buying. So let's say you got this signal. It's time to buy. You buy here, and you hold, for example, until you get opposite signal. When you get the signal for sell, and this signal when fast line drops below orange line, the slow line, you get sell signal. So you buy here. MACD lines gave you signal for sell, something like here. So again, you have signal for buy. Blue line moves above orange line. This is a signal for buying, like here. Here we don't have the signal for selling, but here we have signal for selling, something like here. So you can use these lines for buying, but again, this example can show you how it can be profitable using only MACD indicator and use only lines. You buy here, profit. You buy here, super profit. yes, you will get here stop loss and some maybe loss, but again, this signal also could give you profit. Four signals, three profitable, one not. But here we talk about trend market conditions. When we don't have trend market conditions and when we have range market conditions, believe me, this type of strategy and this idea using MACD lines, it will give you a lot of false signals, and you will be able to lose all your profit from good market conditions just in unsuitable market conditions like range markets. But at the same time, you can use this MACD as additional signal confirming that you have the uptrend. You can use this indicator like additional indicators supporting your trading based on other signals, based on other indicators. And you can use it like a signal confirming that the price moves upward. If it moves upward, you can use the same time frame, you can use higher time frame. So it means you need to search only for buy opportunities. If you have fallen lines, like in this case, in this example, you need to search for sell opportunities only. The same goes about when blue line is below the orange, only sell. When blue line is above the orange, only buy trades. From this point of view, it can be like a part of trading strategy, and provides additional signals. To my mind, based on we can see this indicator like default robots from MT4 training platform. They have two just examples of training robots, and one of these robots is based on MACD. And as far as I know, it's not profitable. If you use only this MACD indicator in the long run, it won't be profitable, and it can be used just like like any other indicator. It's better to use in combination of several indicators. I told you before, we don't have the perfect indicators. All indicators have strong and weak points. So here is the strong point. MACD lines can give sometimes very interesting signals, but sometimes they can give not good signals and reliable signals in the periods of let's say range market condition, and it will be the weak point of the indicator. So the simple idea is to combine DMI indicator and MACD indicator and use MACD only in the market conditions where DMI tell you about trend market conditions. So it's just like a variant which I use with my strategies, and the variant which can use also. With lines it's very simple. So you use the same signals like supporting signals of your trades. As for MACD histogram, you can use it like a tool confirming reversal signals. So when we have reversal signals, what should we do? First of all, for example, price moves upward and reach the level 101.43 and bounced. How we can see that the price bounced? It's very simple. First of all, we had green candle and we got red candle. It means a new direction, price bounces. But at the same time, we need confirmation that the price bounces not only by the color of candles. We can get confirmation based on, let's say, here we could get a trend reversal candlestick pattern. There are some of them which are really can be used like without any additional confirmations. But it's better to get confirmation from another. Let's say oscillators. It will be good, for example, if price bounces from this level, and if you use, for example, RSI and stochastic, and the line of RSI or stochastic reached the overbought zone. this reversal will be really good, and it can be a good signal. At the same time, look at the movement of MACD histogram. So we got dark green bars shows that every new bar is higher than the previous one. If so, we have confirmation for the upward movement. So we have this. But when we get the lighter bar, it means that the high is lower than the previous one, and histogram starts moving in other direction. And this moment when we have switching from different bars, and when we start getting a new bars with lower highs, it can be used like a confirmation that price bounces from the resistance level or the resistance zone. The same goes about bouncing from the support level. Also, you see bearish candles reaching the possible support level. This downward movement was supported by, first of all, it was supported by red bars. They become red because MACD histogram has a signal level. It is 0. When histogram is above, it will be green. When it is below, it will be red. But just how you can use this information from histogram. For example, we got confirmation of the price reversal, and we get lower bars. This point is the best one for starting selling and following the histogram. You start selling until bars can continue falling, and you see the price made pullback, moved upwards. We got the second reversal from this zone, and histogram didn't support this upward movement. So if you decide to buy here, so if you use MACD histogram at that moment, so you should skip this buy signal, because you don't have confirmation from MACD histogram, but at the same time you could have the same supporting or the upward movement from MACD lines, because MACD lines, they are more lagging than MACD histogram, and for starting confirmation and a trend reversal or bouncing, lines will need much more candles in new direction in order to confirm the reversal. Histogram will do it much faster. So that's why MACD histogram is better to use for confirmation reversals, and use MACD lines for confirmation the main direction. If we move back to histogram, following histogram and this sell signal allowed you to hold your short position up to this new signal, buy signal, when MACD histogram started reversing from and supporting the bouncing from support level, and you could start buying from this zone. Also, it's possible to use just like a variant. You can use, for example, MACD lines and histogram together like this. You see this MACD histogram just confirm that price bounces and starts. We have MACD lines moving upwards. It is a confirmation for the upward movement. At the same time, you have periods of growing for MACD histogram. Then histogram starts correcting and move against the main trend, and you can use this moment like a possible correction, a signal confirming a possible correction, a possible reversal against the main trend. And when histogram moved back and started supporting the upward movement, it was at this candle. After closing this candle, you can use this level for buying and continuing the holding your long position. So from this point of view, MACD histogram and MACD lines can work together, like making you start like a system. They can use in different ways. There is also a very important signal which can be used with MACD histogram, like different types of divergence. For example, it's not the perfect one. I just need to pass you the main idea. So when we have difference between price movements and peaks of histogram and lines, we can call it like divergence, and it is one of the strongest signals confirming the trend reversal. So let's say we got here the bearish divergence, new highs, new swing high higher the previous one, but MACD histogram high is lower than the previous one. It tells us such difference with prices. It tells us about there is something wrong with the strength of buyers, and if it is something wrong with strength of buyers, probably the uptrend won't be continued. If so, we should be ready to see the price reversal and the trend reversal. And yes, after that the price dropped, and this signal from charts and from histogram allowed us to, for example, to start trading in the new direction, just using the perfect entry level, or close the long position which you could hold from these zones, just following the uptrend. So again, MACD histogram and lines, they are not the perfect indicators. They have their strong and weak points, and combining all together with another types of trading, with another indicators, you will be able to build more reliable and more solid trading strategy. So I hope I replied. I hope I gave you some ideas about how to use DMI indicator and MACD indicators. Also, we moved. I replied with on all questions, and now I think it's time to close, to finish the stream, because we are more than 1 hour. I should say that every week I will continue posting. I continue posting special posts on TradingView where you can leave your questions. Also, I remind you, we have a Discord channel where we have the special group for posting questions. You can find the link to this Discord channel below this post. Please be active. For me, for example, if I don't have a lot of questions, I just, or if I have no question, I will just move to another type of streams. We will be able to talk about market conditions during market overview stream. But again, everything depends on you. If you are active, if you ask questions, for me, it's not a problem to make every Wednesday. If there are not many questions, maybe it will be done one time per 2 weeks, something like this. But if there are questions for 1 hour, just about it, I will do it every week. Also, if it's not difficult for you, please subscribe to our YouTube channel. We have huge plans for developing and for providing more and more interesting content for this channel, and only your support will motivate us to do this. Just remind you that during the next week, on Monday, I'm going to make market overviews stream on YouTube channel, and estimated Tuesday, Thursday, yes, Thursday there will be stream about algo trading. Believe me, algo trading is really a very interesting direction of trading, and especially if we talk about forex trading. Forex trading is just a type of markets where it's not so simple to trade manually, because there are a lot of movements. Sometimes they can be in opposite direction during the day. Several times you can change the direction. So stocks markets, crypto markets for manual trading they look more suitable and more interesting. But forex markets is the perfect one for trading using different robots. The reasons are following. There is a very good infrastructure, very cheap infrastructure. Uh, Trading robots can be created easily, and the most important thing, they can be tested based on the past data, um, and this data is also cheap. And it's rather simple to start algo trading on forex. So from this point of view, algo trading and the webinar, where you will be able to get more ideas about our robot, um our current results, about drawdown which we have now, and how to pass such drawdowns. Uh, just join. I think it will be interesting. At least we will do the best for making this stream interesting, and reply as much questions as possible. So please subscribe to our YouTube channel. Join us in Discord channel. Thank you very much for joining this and spending time during this stream. I hope I give you something today, something new, something interesting. Thank you very much. See you next time. Bye bye.